Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar struck a high note of 78.08 after following an upbeat consumer confidence release. However, the bulls soon promptly threw in the towel as the market hit a wall of supply from the 78 handle. Yesterday, Westpac consumer confidence jumped from last month's release of 2.5 to 3.6. For the first time in almost a year, there's a majority of consumers feeling optimistic about jobs, household spending and economic conditions. Furthermore, the market may again see another challenge to the upside as the bulls go that extra mile to take the challenge on towards 78.10. But beyond there, I still view the market as a sell zone around 78.45 to 55. The technical indications aren't overly bullish, so I do expect to see the market eventually fail and look back towards the support at 77.65 and then lower down towards 77.20 with a broader objective holding at 76.50. Overnight, the US dollar slipped through the 93 handle and recorded a low of 92.70 to the index, which in turn triggered the advance for euro up towards a high of 118.68. The US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies and is weighted at 57.6 to the euro. As the market slowly digests the September Fed minutes released this morning, it is still questionable whether the minutes held a slightly dovish tone or Fed is keeping to its hawkish path. For the moment, though, the Fed showed that a December rate hike is likely, and many participants thought that another increase in the target range later this year was warranted. Looking to the euro, I expect to see further challenges towards the upside foul towards 118.90, and since last week's confirmation of the bull run in the US, I do expect to see the weakness to return, and this gives us opportunity to short the market and look back towards 118.10 to 117.50. Well, the dollar yen was weaker overnight and posted a low of 112.07, with the forecast still holding towards 111.60. Previous low, though, was at 111.97. My strategy is still to buy dips towards 111.60 and could see a further rebound from that challenge and look towards 112.60 first resistance with 113.25.35 and reassess from there. Do note, though, beneath 111.60 would give concerns due to the fact that the technical implications are on the slightly softer side. Beneath 111.60 opens way towards 110.90 to 95. The pound overnight was relatively quiet and showed little activity as the market still looks towards 132.60-70 as the initial target, with any pullback towards 131.70 as minor. There's still risks that the Bank of England could rattle the cage to the fact that the hawkish outlook has increased and may see a potential tightening in November. With the technical implications slightly on the bull case, may see the first challenge at 132.60-70 hold, but if it breaks, then this would reopen the upside to 135. The gold outlook still remains towards that 1,294 trigger level. A break above there would give further scope towards 99 to 01 or even higher towards 113.09 to 1,313. Any pullback would see a support now at 1,285 or towards 1,279 as a short-term base. The oil still remains to a relatively bullish stance and slightly nudges higher overnight, still holding the objective towards 51.90.95. A break there would give further scope to the upside and maybe even give us a target towards 53, which was the recent rejection back in September. Any pullback, I view as support from 50.60 to 49.60-70. That wraps up my daily video. Thank you very much for joining me today. I hope you have a wonderful day that's ahead of you.